topic in production and operation management called aggregate planning. Now, this aggregate planning, it is used in day-to-day activities, especially for those who are in production. It also looks at how many workers you will need, right, in production, the labor hours required in production, the number of workers required in production. It also looks at the production units required. This is what this aggregate planning is all about. So, in a nutshell, this looks at two strategies that a firm would need to go for as they are looking at their production levels. Okay, so according to this, we are saying aggregate planning looks at the following: number of workers required in production, the production hours required. It also looks at the number of workers hired, the number of workers laid off. It looks at production units required, the overtime units. Also looks at the subcontracting units. It also looks at the stockout units and the stockout cost. Like I mentioned, in this aggregate planning, there are two major strategies. So there are two strategies involved in aggregate planning, and these are: the first one, we are looking at the chase strategy or matching demand. All right. Now, this is a strategy where you vary the size of workforce in order to have a production rate that matches demand. For those companies that do not want to actually maintain the size of workforce, this strategy would be better for them, because this strategy, the chase strategy, is where you need to vary the size of workforce. As we are looking at strategy number one, strategy one, um, for aggregate planning, we have the chase strategy. So we don't want to maintain the size of workforce, all right? As we're looking at the chase strategy, you don't want to maintain the size of workforce. The main agenda here, you need to vary the size of workforce for the chase strategy. Yeah, so you need to maintain the size of workforce, where you need to vary the size of workforce for the chase strategy. It's also called matching demand. So you vary the size of workforce where you vary workforce by hiring and firing workers. So as a company, if you don't need workers by an example, like this is located into winter season now, if you know that if the demand for beer is not necessary, the demand for beer is not necessary for those who are working for breweries company, you can actually fire some workers, especially those who are casual workers. They shouldn't come for work. You lay them off on the chase strategy, because you just want to produce to meet the demand. So you don't, there are some other workers, for this strategy, there are some other workers who are idle, who don't even add value to production. So you actually don't need them, all right? So as we're looking at the chase strategy, you vary the size of workforce in order to have a production rate that matches demand. So the firm vary the size of workforce simply by hiring and laying off workers. As a result, the firm incurs hiring and laying off costs. So for this strategy, the firm produce the exact units required to meet demand. So there is actually no inventory carrying cost for this strategy, unless the firm has a buffer stock, unless the firm has a safety stock. Same as when you get paid, you don't have to finish all your money. You should have a safety cash. You get paid a 5,000 kwacha a month, you need to reserve some money, maybe 500 kwacha, which will actually act as a safety cash, as a safety stock. so that when you are in trouble, you only go to the 500 kwacha and use it for anything else that you need. So this is about the safety stock. So this strategy you only produce to meet demand. That's why it's called the chase strategy or matching demand. I'm emphasizing on this strategy. I'm overemphasizing on this strategy so that you understand the
So, in fact, nala fiene, so that you send me the video.
the the composition
Collins, I want the video in you for
on
I'm
the
very efficient folks.
on these two strategies. All right. Now, so as we are getting to the chess strategy, we are actually saying you are varying the size of workforce in order to have a production rate that matches demand. So you don't overproduce. You only produce to meet the demand. All right, that is on the chess strategy. So meaning for this strategy, the firm does not incur so the cost of the chess strategy as follows here. We have the hiring cost. So in an exam, when a question has been given, or especially on the chess strategy, you don't necessarily need to actually look for all other costs. You need to understand that on the chess strategy, because you're hiring and firing workers, so the major costs that we need to look at here are the hiring cost, the layoff cost, and the last cost, which is called the straight time cost, also called the regular production cost. The straight time cost is also called regular production cost. So there are three major costs of the chase strategy: hiring cost, layoff cost, and the regular production cost. Only these three that are the ones that you're supposed to look at in the exam or in the question paper for every question that comes on aggregate planning. Okay, that is on the chess strategy, which is also called matching demand. All right. So now the straight time cost is equal to production hours. There are two ways of calculating the straight time cost, where we're looking at the production hours. If it's a straight time cost, we're talking about the production hours, then multiplied by the cost per hour. Then again, we have another straight time cost. We're talking about the production units multiplied by the cost per unit. So you're looking at how many units you've produced and at what price. So there's one for production time cost. We're looking about production hours multiplied by the cost per hour. And then the other one, we're looking about the production units multiplied by the cost per unit. So these are three costs. They constitute or they form part of the chase strategy, also called matching demand. So matching demand, chase strategy, hiring cost, layoff cost, and the straight time cost, which can be computed based on these two formulas: the production hours multiplied by the cost per hour, either or the other one is the production units multiplied by the cost per unit. All right. Now, for this strategy where we're talking about the chase strategy or matching demand, the firm does not incur the following costs. So why should the firm incur subcontracting cost when they have already paid, when they have already hired as many workers as possible for them to meet to produce demand? If the company they know they're under pressure, like tomorrow, if the company is under pressure, or for a given month, if the company is under pressure, they should actually hire as many workers as possible so that those workers they can use them in production for them to produce units of a commodity that will actually meet the demand. That is what it means on the hiring aspect. And then on a given time, or that they need that they know that they shouldn't have more workers, they should tell some workers, like especially what is happening to COVID-19 right now. There are some other workers who are not working in the offices; they are working at home from their homes. This is also good for the company to identify even how many workers they can lay off, because even up to now they are able to know that even if some workers are not present, they are actually able to survive and meet the demand of a customer, even in the banking perspective, or be it at any other office or in every department where people are working from. This is the essence of the chase demand. All right. So they can know how many people they can chase, and the company will still survive and be a going concern company and continue operating for the foreseeable future. So the company under this strategy, they may not incur the foreign costs like subcontracting costs because they would have actually have incurred the cost of hiring. All right, because the company can only subcontract if they know that they cannot produce to meet the demand. If a company receives an order for a certain units that they need, and then a customer will need those units, so and then the company cannot produce to meet the customer's satisfaction or customer's demand. So if a company policy
The company policy
does not
does not.
actually allow overtime, then they can subcontract. They can give somebody who is able to produce a similar commodity. Okay. So now here under such strategy, they cannot subcontract because they would have actually hired as many workers as possible for them to meet to produce demand. So they cannot incur subcontracting because they can incur hiring because they can have so many. Even if you are supposed to finish your project, you're building in your house. If you started with 10 workers and those 10 workers are not enough, you can hire as many workers as possible for you to actually finish up your demand. So there's no subcontracting, there's no overtime because why should you pay overtime? You can only pay overtime otherwise for the other strategy, but not this one because you can have time to hire as many workers as possible. And then again, the company may not say that they don't have stock for this strategy because they would have hired as many workers as possible for them to produce to meet demand. And then there is no actually there is no actually um, inventory carrying cost unless the firm has safety stock because you don't overproduce for this strategy. You don't overproduce. All right, then we look at the reason why the firm does not incur the above cost is because they could have either hired or laid off workers and incurred either hiring or lay off costs. So it's not necessary for them to incur subcontracting costs. It's not necessary for them to incur the overtime cost. It's not necessary for them to incur the stock out costs. All right. So that is it on the first strategy of aggregate planning, where we have looked at the chase strategy. All right. Now, getting down to the other strategy, because there are only two strategies here that we actually need to look at. Then the most important thing is for students to understand the theoretical part of it before getting into the calculation, because you have to know which cost goes to which strategy, as we are looking at um, the aggregate planning. All right, so we're getting now to the other strategy where we're looking at the pure level strategy. I'm sure everyone else, if I'm too fast, please uh, feel free to ask a question so far before I proceed.
Proceed.
If it is clear, I can continue. All right. All right then. Silence means progress. So many again continue. I'm sure people are with me. Okay. So we are getting to the other strategy, which is called um, pure level strategy. Now, this is a strategy where the firm maintain the state workforce and production. So this is a strategy where the firm maintain state workforce and production. So All right, then let us see just be a bit, let us just be a bit mute so that I can explain clearly for people to understand this strategy. So it's a strategy where the firm maintains steady workforce and production. They do not want to hire or fire workers. There is no hiring or layoff cost. Okay, in this case, we are talking about the maintenance of workforce and production. So there's no hiring and if you have 20 workers, that's all. All right. If you have 20 workers, that's all. So if the firm cannot produce to meet demand, they can incur either of the following costs. They can incur either of the following costs: overtime costs. So the firm can incur either overtime costs. So meaning that if those 20 workers, an example, they cannot produce to meet demand, you can tell them that they shouldn't knock off, they shouldn't go home. They should, even if they knock off at 16 hours, because they're only 20 and you don't want to hire anyone and you don't want to lay off anyone. So you, as management, you decide which one will be cheaper. You actually tell them not to go home, and then you'll be ready as management to pay for overtime cost because they will knock off late. So you have to pay for overtime. If that option one for overtime is not possible for the company, um, you actually decide to subcontract, just give somebody else who is able to produce the similar goods that those 20 workers are able to produce. As a result, the company will incur subcontracting cost. So that is only the other composition of the cost. So apart from the overtime, which it can be or it may not be there, if the company policy does not allow overtime, you can subcontract, or the company will be just be honest enough to say we are not able to meet your demand because our 20 workforce that we have already knocked off, and as we don't subcontract, so the company will be honest enough to declare that they don't have stock, so they will actually incur the stock out cost. That is on option 3. All right. Now, if we get to this other down, we're saying if the company has constant workers who cannot produce to meet demand, then they can incur either of the above costs. All right. So those 20 workers who cannot produce to meet demand, they can incur either of the above costs. We are saying either is because that they may not incur all of them at once, so they can incur one of all those costs at a time. So they cannot incur all the costs listed above at the same time, but can only incur either of the costs. Now we are getting down to finding the pure level strategy is calculated by summation of demand minus the beginning stock, then divide by the number of periods. So you're going at summation of demand minus beginning stock, divided by number of periods. So we're looking at the total demand for the period, for the year, that is, minus the beginning stock, then you divide by the number of periods. Okay, so summation of demand minus beginning stock, then divide by the number of periods. So in this case, what we are trying to say here is that the reason why we are subtracting the beginning stock is because we cannot produce what we already have. We cannot produce what we already have. So this is why we actually look at this pure level strategy. So this pure level strategy in a nutshell, in short, we are saying is a number of units we can produce on a level base. All right. For HS strategy, we can vary our production and our demand may vary. So vary production. So let's say the meaning of chess strategy. Now here for the level of strategy, we're looking at same production. We are not producing as per demand. We're not producing as per demand. We are actually producing on a level basis, right? Okay, so here we cannot produce what is already there. That's why we are subtracting the beginning stock in the formula above. Now, for the pure labor strategy, the firm should choose the cheapest mode among the three provisions, either overtime. All right. So if the 20 workers cannot produce to meet demand, it will be possible for the company to allow the 20 workers not to knock off. So that's the difference between the HS strategy and the labor strategy. Labor strategy, when you have the 20 workers who cannot produce to meet the demand, for argument's sake, as company management, you can decide, you tell them, okay, you people, you're not going to knock off at 16 hours, as it were. We will knock off at the 20 hours, an example, because we are short for in production. We want to meet our demand because it is now Christmas and uh, in a brewery company like so many breweries, you find it's a demand for beer. So you find that they need so many crates of beer at a certain place. So those 20 workers, if they cannot produce to meet demand, you tell them that okay, we'll pay you for overtime. So we'll pay you overtime. That is one option. Now, if those people have actually the company policy doesn't allow overtime, you can tell them to knock off, and then you can tell them to knock off, and then you can say, okay, we're going to subcontract the units that we cannot produce now. We subcontract. We'll give another firm, maybe Canco breweries or other breweries who are in the same line of business. They are the ones actually who are going to produce our shortfall for us to meet the demand. So as a company, we incur subcontracting cost. That's option two. Option number three, if you cannot subcontract as a company and the company policy doesn't allow overtime, then you'll be honest enough as a company to just declare that you don't have stock, and then you incur what we call the stock out cost. All right. So that is only the aspect of the pure level strategy. So they cannot incur all the costs at the same time. That is overtime, subcontracting, or stock out, because they need to choose which is the cheaper among the above costs. All right. Now, let us get into an example where we need now to know how these two strategies operate. All right, so we're going to look at this one, example one, where it says Sunshare Limited produces a variety of furniture products. So this one deals in furniture production. All right, then operation manager wants to prepare an aggregate plan for the next 5 months. That is, those months given in the table. Demand forecast is given below. So we have a month one through to month five. And of course, we have seen the demand for 1 month. Month one is 150, month two is 170, month three is 180, month four is 160, month five is 160. All right, then the question says, according to the question, continuation says the cost of production per unit using our regular time is $50, using overtime is $25, and using subcontracting is $80. So among these three, we know for real for sure that for the chess strategy, you shouldn't entertain overtime, you shouldn't entertain subcontracting, you shouldn't entertain the stock out. For the chess strategy, we only entertain hiring and we only entertain laying off. All right. Now, inventory holding costs, which is also called carrying cost per unit per period, like in this equation is $5. Then the back order cost is $60 per unit. Back order cost is also called the stock out cost. The back order cost is $60 per unit. The hiring cost is $150 per worker. The firing cost is $200 per worker. So we have these two programs, these two costs that we need to account for. The hiring cost, we were talking about $150 for hiring cost, and then the firing cost is $200 per worker. That is, if we were to fire a worker, is $200, and if I to lay off a worker, is actually $50. Now here question continues. Currently there are 12 workers and each can produce 15 units per period. That is For now, we have 12 workers and each can produce 15 units per period. Workers can be hired or fired, but at most only 12 workers can be on the roll. Now, here, I'm supposed to make mention of the fact that when we say 12 workers can be on a row, means that we should not exceed 12 workers for a given month. The utmost number of workers that we need here, we need to have 12 workers for a month, meaning that for each of those months, from month 1 through to month 5, we need to have actually maximum of 12 workers per month. Overtime capacity is 30 units per period, and subcontracting capacity is 10 units per period. So overtime capacity 30 units per period. So we shouldn't go actually more than that per capacity of overtime per given month or period. And subcontracting capacity is 10 units per period. Beginning inventory is 0. And then it says no back order is allowed at the end of the 5th month. So no back order is allowed at the end of the 5th month. Then when computing number of workers needed, make sure you round the number up to the whole number. Develop an aggregate plan using a chess strategy and determine the cost. Number B, part B of the question says develop an aggregate plan using level strategy and develop the cost. Which plan should be used? All right, then. So if I'm supposed to, even from the pamphlet, the revision kit for the pamphlet, we look at this same question here on aggregate planning. It's the same question we're looking at. It's a pamphlet on page 20 of this pamphlet. There was a question where the question came from that as I'm explaining. So we are getting back now here as I navigate, as I look at the revised POM pamphlet on page 20. So the more questions that are done on aggregate planning, which is very practical planning because of the two strategies that I've explained that you need to know, despite the fact that the examiner can give you a number of costs. You need to know which cost goes to which strategy. Okay, so we're now looking at the solution. As we can see here, they're telling us that the current workforce is 12 workers for now. And then we are producing, these are the demands, all right, for month 1 through to month 5, we have the demand units. All right, then. So month 1, we had 150, 170, 180, 160, and 160. Beginning stock from the question as we have given, it is 0. Now, our production for a chest strategy or matching demand, we're producing to meet demand. So meaning for the first month, we're producing the same exact, since beginning stock was 0, that's why we produced the 150. If the beginning stock was 20, we would have produced actually a 130 so that we meet the demand of 150. If the beginning stock was 10, we would have actually produced the 140 so that we meet the demand of 150. So we have these productions that we have been given here: 150, 170, 180, 160, and 160. That's our production. Now, number of workers, we are told that each worker from the question is able to produce 15 units according to the information given. All right. Each worker is able to produce 15 units per period. So since each worker is able to produce 15 units per period, and we have produced 150 units in month of the first month, we're dividing each of those productions by actually 15. So we're getting the number of workers for month 1, 10, 12 for the second one, 12 for the third one, 11, and 11 for the fifth one. All right, but we have to we have to be clear here. The question says the current workforce is 12 workers. So you have 12 workers at the current workforce. So meaning that since we have 12 workers, 10 workers in the month 1, all right, we fired the 2 workers, meaning we fired the 2 because the current workforce we had 12, and then the number of workers for now we have 10. All right, then. So we can now look at the build up of workers from um, um, From 10, we're now looking month by month. So from 10 to 12, we have actually two workers which we hired. We had two workers here. From 10 workers to 12, we hired two. And from 12 to 12, there was no hiring and laying off, so it's zero. From 12 to 11, we actually laid off, so we didn't hire on the row for workers hired. From 11 to 11, zero. This is what we have here. So hiring cost for the first month, zero. Second month is 2 times 150 multiplied, so we're getting a 300. These other ones, zero, zero, so the total is 300. Month one, since we found actual workers of 10, current workforce was 12. It means that we actually laid off two workers. That is why we have a two there. Then since we had two in the other second month, we didn't lay off. And the other month we didn't lay off. We laid off one worker in month four. And then month five, we didn't hire and lay off. So meaning that our layoff cost for the month of the first month, which be it January or other month, whatever you can call for the first month is 2 multiplied by 200, laying off cost per worker, which we are getting a 400, zero for the second month, zero for the third month. Well, then one worker multiplied by 200 is 200 for month four. And then the total number of layoff costs, we are getting a 600. Right about now, we get into regular production cost, where we produce these units, 150 units, 170 units, 180 units, 160 and 160. And then our regular cost that we have here from the question, we have been given our regular production cost of $50. So we're multiplying the $50, multiplying by the 150 production, so 75 for the first one, the 150, the 170 by 50 is 8,500. 180 by 50, 9,000, 160 by 50, 8,000, 160 by 50, and then we're getting the total regular cost of 41,000. Then the total cost of this strategy, we aggregate the 300, the 600, and the 41,000. We're getting 41,900. That's the cost of the chase strategy, also called matching demand. Now, getting down to the other strategy we're looking at now, the level strategy or the pure strategy, as per the question that we have here, right, on part B, we are saying our level strategy, first of all, we have to look at the level production, where we are saying our level production is equal to summation of demand, then minus beginning stock, and then divided by the number of periods. So we are going to aggregate the demand starting from the first demand of the month given, which is addition of all those 150, 170, 180, 160, and 160. Our getting down to this, we're getting 150, 170, 180, 160 plus 160. Then minus the beginning stock, which in the question is saying that the beginning stock is zero. Then dividing by 5, they were getting 825 by 5, which is 164. So this is our level production units. Regardless of demand, we are able to produce 164 units. All right. Then we are able to produce 164 units on this level basis. We are going to say required number of workers now is equal to 164 divided by 15, which is 10.9 workers, approximately 11 workers. So meaning these are the number of workers that we are going to maintain. So we are able to maintain 11 workers because our level production, we're looking at the overall production for the period. On average, we're talking about our average production in short. So we're talking about the 150 plus 170 plus 180 plus 160 plus 160 minus a zero. Then divided by the number of periods, which is 5, we're getting 164 units. And then we are getting 10.9 workers, 11 workers approximately. This is what we have. Now, this is where I really need to make mention and for people to understand that in a level strategy, you don't hire and hire workers. You maintain workforce. You don't fire workers. You don't lay off workers. So this is what goes on. Right now, we are getting into the table. We have a month. We have the month. Please, anyone else should be actually mute. Please let us be on mute so that we can otherwise concentrate properly. So month one, month two, month three, month four, month five, please let us be on mute so that people can actually get whatever it is that I'm explaining right now. All right, then. So we have month 1, 2, 3, 4, 5. The demands are the same 150, 170, 180, 160, and 160. And then we are getting to our beginning stock, which is zero. Our production is the same production, which is 164, which I've calculated there, I've shown. Then we produced 164, meaning that zero plus the production of 164, which is 164. We open with zero plus the production 164 minus the demand at 150. We remain with 14, which we could have carried forward as beginning stock for the second period, for period two. 14 plus 164, then minus a demand of 170, we're getting 8. 8 we carry forward, 8 plus 164 minus the 180, we're getting negative 8. The shortfall, which is the back order cost, the back order units, which are the shorter units required to meet demand, we carry forward negative 8 plus 164 minus 160, we're getting negative 4. Negative 4 carrying forward, negative 4 plus 160 minus 160, negative 4 plus 164 minus 160, the answer is 0 here for ending stock. Now, this reminds us of one thing that we need to understand here, that the question says back order cost at the month should be 0, at the end of the period should be 0. All right, they're saying back order cost, no back order is allowed at the end of the 5th month. So there's no back order at the end of the 5th month. This is what it means. So we're getting down here. We have the number of workers, 11. Those are number of workers. Back order cost, we have a 0 for the first month and second month. Then the third month, we have the 60 times 8, which is 480. Okay, so the 60 times 8 is 480. For the other one is 4 times 60, which is 240. So the total back order cost is 720. The back order cost refers to the units out of stock, like in the week 3 and week 4, we have the stock out of units, which is negative 8, 8, and 4. So we have those ones multiplying by, and we are getting a 720. Then carrying costs, these are physical costs. Like in period 1, we have 14 units that we carried forward, multiplying by 5. Carrying costs, holding costs per unit. Carrying costs and holding costs, they are one and the same thing. That is just one and the same thing. Holding costs and carrying costs is just one and the same thing. So we are getting now to multiplying the 14 by 5 and 8 by 5. We're getting these, and then the total carrying cost is 110. Now, our regular cost, we produced 164 units and at 50 per unit on a regular basis. And this is how we are getting the our our regular production cost. So our regular production cost here, we are getting to multiplying, all right, multiplying the one the all right, we're multiplying the 164 by 5, we're getting 8,200. We're getting the 8,000, each of those ones, because it's the same 164 production units per month, on multiplying by 50 dollars per unit. So we're getting $8,200 for each of the month, because they were the same. And then we are getting the total of the regular cost of 41,000. Now, we should not forget one thing here. There's a fun thing about this strategy. We know for you that for the pure level strategy, we don't actually hire and fire workers, but we actually maintain the steady workforce. In this instance, we have, we have a challenge, so to speak, because we had maintenance. They told us that we have 12 workers for the current workforce. There are 12 from the question here, but I've come to discover that we have 11 workers. So meaning we only fired one worker uh, before anything else. So we only fired one worker. So for this one, we'll account for the worker we fired. So we are going to say our total cost in this case now will be a back order cost of 720 from the table right about now. The current cost is 110. The regular cost is um, 8,200, but of course it was supposed to be multiplying by 1, 2, 3, 4, 1, 2, 3, 4, 5, which is giving us the 41,000, and then we had the level of cost of 200. So for this strategy, we are getting our total regular cost. Our total regular cost is 41,000. That is, we looked at our production units on the level base was 164 units, which has been shown under the calculations above here. So we actually need now to um, multiply the 164 units that were produced multiplying by $50 per unit. So we have this one. So the total is 41,000 from this computation where it says the regular cost was supposed to put instead of 8,200, we are supposed to put the 41,000. So that's the essence of class. That's the essence of explanation. So the 720 is for the back order cost. The current cost is 110. Then the regular cost should be 41,000. And then we should also account for a level of cost for one worker of $200. And then as we compute all the costs, here we're getting for the 2030, dollars. This is about um, the total cost of this plan as we are looking at the pure level strategy. Now, here, what is important is for us to actually make a comparison between the two strategies, the pure level strategy and then the chess strategy or matching demand, where we actually differentiate the two to see which one will be cheaper that management is supposed to go for. Now, getting down to this one, we are saying that since they had 12 workers and remained with the 11 workers, it means that one worker was fired. The cost, the chess strategy should be used in this case because it has the least cost. All right. So as we look at the two costs, the other one is for the 2030, which is for the 2000 for $2,000 30, and then the other one is actually for $1,900. All right. So you look at which strategy is actually cheaper. So the other one, 41, is cheaper than the other one. So if you are to go for the chess strategy, they would actually have a cost saving of the difference. So in a nutshell or in a summary, aggregate planning has two major strategies, like I mentioned. So here we're coming to the end of the topic for aggregate planning. And just to overemphasize, we are talking about this strategy, this planning, where we have two strategies, where we have a chess strategy, we also have the labor strategy, and which strategy entertains hiring, firing, and which one does not, and which one goes for a maintenance of the size of workforce. So this is what students are supposed to actually understand as we look at aggregate planning, unless there are questions.
Hello. Yes. What about stable strategy? We're not required to know that.
The stable strategy is a level strategy. Level simply means stable. Where you are working for the company, whether you have reported for work or haven't reported for work, you will know that at the end of the period, you have a stable salary, you are going to be paid. It's dangerous for a chess strategy because if you need me now for consultancy, you won't need me when you need your exam. When your exam is nearby, you need me. When you write your exam, I will become useless, or a lecturer will be, or a consultant will not be, you will not be engaged. All right. So a stable one is where you know that whether there's class or there's no class, or where there is a production or production, but you'll be paid. All right. So this is what these two strategies actually entail. So if you talk about this stable strategy, we are talking about a strategy where you're looking at level strategy. Whether you have gone for work or haven't gone for work at a month end, you still get your salary. But for a chase strategy, you can be chased if your boss doesn't need you at that time. You will say, because of his attitude and other things, and chess strategy of matching demand. This is the reason why you do, but you don't realize that you use the same strategies. You say, why do we do this form? All right, we only do this course, but we use it in every day-to-day activities. An example, you can have your maid, and she's not actually she doesn't respect her work. Today she may come, tomorrow she will give you an excuse. So you can hire or fire. You can fire. The problem with the chess strategy is that you can fire as many or you can hire as many as possible, and then you can get tired before you realize you may not need your maid, any maid at a time. That's the only problem with the chess strategy. But the level strategy, it's also good for planning because you know, okay, I have so much. If you are an employee, you can plan because you know that at the end of the day, at the end of the month, you'll be paid the salary. Is there a question again? Hello? Is there another question? All right then.
Yes, again. So what if you're asked to do a mixed strategy in the exam?
Yeah, when you're asked to do a mixed strategy in an exam, then you have to strike a balance between the chess strategy or matching the chess strategy or the level strategy. Okay, so I will do an example on that one and in the next class, so that I show you what we should do if you have a mixed strategy. All right, so that you see what is going to happen there, because you don't want to hire, you don't want to fire, or you don't want to maintain workforce, so you do a mixed strategy. So there will be an example for that one so that you understand clearly on how a mixed strategy operates. All right then, unless there are further questions, but for now, you go through the material and please subscribe and see how we can help you out. So there's no problem. We can have another session on aggregate or other topics so that you can understand each of these topics in detail. So it's bye for now, unless there's another question before I go. So just understand the difference between these two strategies, and as much as we look at the different examples and questions, it will be very easy for you to follow, for you to understand the theoretical part of it, which strategy is what and what follows in what. So for now, we can end here.